Is it something that's valid, or should you just actually hold on to your asset and then just wait for it to go up? The answer to that is it depends. If you are trading and your main goal is to make money off of the fluctuation, then you should cut loss. If it goes down, it does not go based on where you want it to go, then you should get out of that particular position. Hey guys, so in this video, let's talk about when should you cut loss. So I'm doing this video because we have Aris here. Pinilit niya ako ng topic. Before we talk about when should you cut loss, let's go over the fundamental principle of should you even cut loss, or should you just buy and hold and just wait for it to go up. So cutting losses is basically you buy, of course, stocks or any other assets. When it goes up, you gain a profit. But you buy something, it goes down, you sell it at a lower price, it's you cutting losses. This is something that only works if you buy the real asset or if you buy spot. But if you buy anything that's leveraged or it's anything that has a derivative component, sometimes if your margins or your leverage is too big, you won't even have the opportunity to cut loss anymore. You'll be closed out of your position, especially if your leverage is very, very high. It means also you will automatically be at a loss. It's very apparent for investing spot. It's apparent for buying the real asset and then selling it at a lower price. Is it something that's valid, or should you just actually hold on to your asset and then just wait for it to go up? The answer to that is it depends. If you are trading and your main goal is to make money off of the fluctuation, then you should cut loss. If it goes down, it does not go based on where you want it to go, then you should get out of that particular position. The name of the game is, if you are trading, if it goes down, you have to make your losses smaller. You set a specific area on when you're supposed to sell, and then you get out of that. Tempting also, because sometimes that when you buy something tapos it goes down, there's something at the back of your head telling you that I'll just wait for this, it will go back up again. If I hold on a little bit more, it might go up. But what if it doesn't? So you have to realize that we don't know what will happen to a certain stock that we buy. What we can control is how we manage the trade. And part of managing the trade is to set conditions on what if the trade does not go the way you want it to go. So if you're trading, it's okay to cut loss, but you must follow where you want to sell. So regardless if you're using technical analysis or if you're using price points or percentage points on when you're supposed to cut loss, you follow that. So if you say you're gonna cut loss at 5% or 10%, or you're gonna cut loss at the breakdown, or you're gonna cut loss when it goes into a downtrend, you follow that and you sell. If it goes up, that's part of the game, that you should have just held on to it and you would have been okay. But you wouldn't know what if it goes even lower. It's okay to cut loss if you're trading, but as long as you cut loss at smaller portions. Don't wait for it to go down at a massive level already, because it will be harder to recoup that and you won't be able to actually maximize that anymore. Now you might be asking this, what if I own something and it's down already a very, very large part and I wasn't able to cut loss? So the thing that you ask yourself is this: if you sell it right now, is there still a chance that it goes down even lower? Because if it doesn't go down even lower and you sell right now also, then you not only lost a large part of what you own, but it being in cash doesn't do anything. It doesn't give you the ability to recoup your losses. It doesn't give you the potential to make more. The only time you sell it is if you think that this asset or this stock may go down even further, that it's better to sell it right now. However, I want to say this, that if you don't think that it will go down, but there might be a better stock to buy that could possibly go up in price, or at least give you the ability to be able to recoup that by transferring it and reshifting it and putting it into a better stock that will be better for you, then by all means, because that happens to everyone. They buy a certain stock that's down, transfer it to something that's better, and because they transfer it to something that's better, somehow the losses are recouped. So that's a better proposition, that you are pivoting into something that will give you a better scenario to actually earn more. So if you're an investor, there must be a reason why you are buying that particular stock, regardless if it's Apple, Microsoft, Ayala Corporation, or if it's Starbucks, or if it's Nike. There must be a reason. If you're looking at it from a level of profitability, that you are buying it because you like the growth trajectory of that particular company, and then it's not anymore earning, or they're starting to lose money, or they're not growing anymore, or their opponents are somehow beating them, if the reason why you bought that stock is no longer there, then it's okay to sell, even if it's at a loss. And I know that's hard to do because we become emotional sometimes on the stocks that we own, and especially if it's something that you put very, very important money into it already. It's okay to cut loss as long as you've done your research that this stock may go lower even further, and there might be a better way or a better stock that you could actually transfer it to that could give you that upside or that could compensate that loss. But the rule of thumb should always be, if you want to cut loss, it should always be at a point where, number one, the margins for your losses are smaller. Number two, that there's a better place to put it, because if you're gonna cut loss and then it's a large amount of money already and then you just leave it in cash, you won't recoup it. It doesn't give you the potential to earn even more. So the worst thing that you could ever do is sell just because you're frustrated, you're scared, or you're not so excited about it anymore. That's one of the worst things you could ever do. Always sell. It's part of your plan. You buy something, you buy a stock or you buy a cryptocurrency. It always has to be, you have a scenario optimistically when to sell, to take profits, but you also have a scenario when to sell pessimistically, to start to cut losses also if the trade is not going your way as well. So you always have to set when to buy, but you always have to set when to sell when you make money, but you always have to set a sell when you're actually losing as well. So if no one can play a perfect game when they're investing in the stock market, losses will always be part of it. But the name of the game is that when you win, maximize your wins, continue to go up if you're following the trend and you just let it go up. But if you're wrong, you admit it and you sell and you move on to fight another day. I hope I answered your question. I hope that this was something that was useful. I hope I answered your question pala. Ikaw pala nagbigay ng question to. So if you have more questions about cutting losses, put it down below. I hope that this was something that gave you value, and I hope that this is something that helped you in terms of how you're going about your journey also about stocks as well. So stay up until the end. Like, share, subscribe, smash the bell so you get updated every time I come up with new videos about the stock market. Leave a like down below as well. So Marvin Kermo from Barceloneta Beach here in Spain. I hope this video helps you trade well, trade strong, trade smart. See you all again soon. God bless you all.